Hello everyone, it's Jefford again from Rubik's Academy. Now today we're going to talk about stock exchanges, okay? And I think it's very important to talk about these institutions because a lot of people will not know how they work, okay? So in the last episode I already talked about orders and prices and all that, right? So today I think it's important for us to understand how these orders and prices work in a stock exchange. Now first of all, you have to understand that there are different stock exchanges in the world, right? Like for example, in Singapore we have what we call the SGX, the Singapore Stock Exchange. Alright, then we have the NYSE, which stands for the New York Stock Exchange. Then at the same time, in the United States, you also have this thing called the NASDAQ, which is also a stock exchange. Okay, then for example, in Japan, you have the Tokyo Stock Exchange. It's called the TSE, Tokyo Stock Exchange. And then in England, in the United Kingdom, you have the London Stock Exchange, which is called the LSE, right? Then you have the Australian Stock Exchange, ASX, sorry, this is called ASX. Alright, so different countries have different stock exchanges. That's number one, you need to understand that. And because of the fact that they are located in different countries, they also have different operating timings, which is why depending on the stock that you buy, you have to look at the chart or know that that stock is only active during selected hours. Okay, so for example, I'm living in Singapore. For me, the New York market only opens at depending on whether there is daylight savings. Okay, it can either open at 8:30 or it can open at 9:30, right? Then for example, I would know that the Australian Stock Exchange for me opens at around if I'm not wrong, is around 6:30. Okay, then the Tokyo Stock Exchange opens around the same time as Singapore, which is, well, it's around 8:30, right? Based from the perspective of a Singaporean. Then the London Stock Exchange opens at about 4:30 p.m. if I'm not wrong. Okay, so from a Singaporean's point of view, these are the hours that I need to watch. If I buy an American stock, I need to watch these hours. If I buy a Japanese stock, I need to watch this hour. If I buy a stock that belongs to a company that is situated in the United Kingdom, I need to watch this hour. Australia, this hour. So you need to understand different market opening hours in order to understand which are the hours to watch your stock at. Okay, that's number one. Number two is a stock exchange basically facilitates bidding and asking prices. Okay, so in the past, they used to have this thing called floor trading. Right, floor trading, whereby you can see literally floor traders on the floor shouting out orders and getting in orders to match bidding and asking orders, bid and ask orders. Okay, but nowadays everything is done electronically. Okay, so everything is done via an automated server that the exchange has. The days of floor trading are over. Okay, that's number one. Number two is you have to understand that because of the fact that there are opening and closing hours, okay, it does not mean that during the closing hours stock prices will not be affected. It will still be affected. It will be affected through this thing called the gap up or the gap down. Okay, so for example, if I am a Singaporean, I buy a US stock. I know the market opens at 8:30 p.m. Singaporean time and closes about at I think 4 or 3:30 a.m. Singaporean time. Usually it's 8 hours, right? So just because the US market is closed until the next day, it does not mean that the stock prices cannot be affected. It will still be affected, and it will be affected through this thing called a gap up or gap down. Now, how do these two things look like? All right, give me a moment. Okay, you can see this is the chart is loading. Okay, now you can see from here this is the Euro USD chart. All right, Euro USD. Now it looks very nice, okay, because it looks like there's no gap. There are no gaps at all because this is Forex. Forex is open 24 hours and 5.5 days. Okay, but that's not the scope of this discussion. Now let me just go to a stock. So for example, let's say instead of going to FX, I go to companies. Let's say I go to Tesla. Everybody loves Tesla, right? So okay, let me just zoom in a bit. Okay, wait. Okay, I need to zoom in here, not on my browser. Okay, so you can see all these areas. You can see there's a gap here. All right, there's a small gap between this candle and this candle, right? Then you can see another one here. Okay, see between this candle to this candle, there's a gap, right? Between this candle and this candle, and the candles before that, you can see there's no gap. And the candles after this candle, there are no gaps because the market is open. Prices are constantly moving up and down. We will talk more about what these candles are in the later lessons, but for now, just know that these candles represent the movement of prices. That's all. Okay, so you can see that between here, this candle to this candle, there is this gap, the green colored rectangle, right? So that rectangle represents the gap up. In this case, it's a gap up because the next candle appeared at a higher spot compared to the previous angle, right? The chronology is from left to right, so from here to here. As we go from left to right, time is moving on, right? We are moving further down the timeline as we move from left to right. Okay, so you can see there's a gap because this gap represents the market closing and the market opening the next day, right? When the market closes, the candles do not appear because the market is closed, but whatever that is happening during market closure hours will still affect the stock's price, but it just has not been reflected on the chart yet, so it will be reflected the next day. Okay, when this candle over here starts, okay, so that is what we call a gap up. If this candle over here appeared at a lower spot, is what we call a gap down. So this is a gap up. Let me try and find a gap down for you. I think it's a bit hard to find a gap down for Tesla because it has been quite bullish. Try to find a gap down for Tesla. Yeah, it's been quite bullish. Okay, finally a gap down. Okay, so this is what we call a gap down. Let me put in a different color. Okay, the red box there is what we call a gap down, because in this case you can see that from this rectangle over here to this one over here, okay, you can see that. Let me just use a arrow. Okay, so you can see that from this angle over here, this candle over here to this candle over here, there was the next candle appeared at a lower position, so that's what we call a gap down. Okay, all right, so few things to recap: gap up, gap down, market trading hours, different stock exchanges in different countries. All right, but for Forex it's 24 hours 5.5 days. For stock trading it's only 8 hours per day, depending on the stock that you buy. If you bought an American company's stock, you have to stick to the American trading hours. If you bought a Singaporean stock, you have to stick to the Singaporean trading hours. Alright, thank you very much. My name is Jefford Lim from Rubik's Academy. See you in the next lesson.